Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. Oil rises 4% on supply trades, still set for weekly drop. Oil prices rose about 4% on Friday, spurred by real and threatened cuts to supply, although futures paused a second weekly decline as aggressive interest rate hikes and China's COVID-19 curbs weighed on the demand outlook. Russia's President Vladimir Putin has threatened to halt oil and gas export to Europe if price caps are imposed, and a small cut to OPEC plus oil cut plans announced this week also support prices. Over the coming months, the West will have to contend with the risk of losing Russia's energy supplies and oil prices, said Stephen Brain of oil broker PVM. Pressured by worries about a recession and demand, Brennan down sharply from a surge in March close to its all-time high after Russia invaded Ukraine. The group of seven is trying to find ways to limit Russia's lucrative oil export revenue in the wake of the invasions, a price cap that G7 countries want to impose on Russian oil to punish Moscow should be set at a fair market value minus any risk premium resulting from its invasion of Ukraine, a U.S. Treasury Department official told reports on Friday. Despite Friday bonds, but crude benchmarks were headed for a weekly drop, with Brent down about 2% on the week after at one point hitting its lowest since January. WTI posed a weekly decline of 1%. If the U.S. Federal Reserve is able to keep the unemployment rate below 5%, it can be aggressive on bringing down inflation, but after that, traders will appear. Fed Governor Christopher Waller said on Friday the Fed shall be aggressive with rate hikes while the economy can take a punch, he said. A U.S. Department of Energy official said the White House was not considering new release from the U.S. Strategic Petroleum Reserves at this time beyond the 180 million barrels that President Joe Biden announced a month ago. Earlier, Energy Secretary Jennifer Granholm told Reuters the administration was weighing the need for further SPR release. The White House is backing of another release from the SPR, said Phil Floyd, an analyst at price feature groups. Looks like a lot of the fears the markets had previously have gone away. U.S. oil rigs fell 5 to 591 this week, their lowest since June. Energy surprised from Baker who said as the growth in the rig count and production has slowed despite relatively high energy prices. Meanwhile, European central banks prudential rate hikes of 75 basis points this week and more COVID-19 lockdowns in China have weighed on prices. The city of Chengdu extended lockdown for most of its more than 21 million residents on Thursday, while millions more in other parts of China were told to shun travel during upcoming holidays. Money managers cut their net long U.S. card futures and options position by 3,000 contracts in the week to save 6, the U.S. Commodity Futures Trading Commission said on Friday. U.S. CPRL and nursing strike Fulton turmoil what's moving markets. The U.S. releases consumer inflation data for August, a key input for the Federal Reserve's meeting next week. A real strike looms larger, while governors are on strike in Minnesota. Oracle's strong earnings keep stocks in buoyant mood in pre-market and very mercilessly. The big event of the week is upon us. The U.S. will report consumer inflation figures for August, with all that means for the Federal Reserve policy meeting next week. Analysts expect prices to have fallen on the month by a manager. For the first time since May 2020, owing to the long and steady decline in gasoline prices from their summer peak, they have continued their decline since the end of the month and have now fallen for 13 straight weeks. My video is all from me. Don't forget to like, comment, share, and subscribe. Thank you.